So we did a very nice continuation to the upside move from the previous video here on YouTube. And basically the weekly closed super high above the downward trend line. You can see here that we broke out of on last Tuesday. So the weekly is well above it. We're back close to the 380s. Believe it or not. And this is a super bullish close, two back-to-back strong weekly candles, which typically warrants even more continuation afterwards. Even if we were to have a pullback this week, it's likely that we are going to see continuation, especially into the end of this month. So I do like what I see so far here on QQQ, as well as, of course, SPX. That's mainly what I've been looking for, at least for the major bounce. We completed the head and shoulders pattern over here once we went down and flushed to around these 4,100 levels. That had a major rally to the upside, and now we're starting to see that end of year rally thesis play out that I've been referencing now for the last couple weeks. But basically, as of Thursday this week, if I go to the 15-minute chart, something interesting happened. We did have a breakdown intraday, as you can see here, of the uptrend. This key blue trend line over here was the uptrend that we had been following for about 4 sessions, at least since November 3rd. And you can see here, we respected it until it broke below and closed the daily below, which typically would mean continuation afterwards. However, bulls were able to gap it up to around the same trend line the following day, and then just broke out straight above and continued even higher, which makes this a major fake out pattern. So as long as we do stay above mainly this blue trend line over here, which is from those October of 2022 lows, I mentioned this in the last video, but as long as we stay above here, it is a very bullish emphasis for more upside. Now, we are certainly overextended at the moment, but the fact that we were able to have this fake out move where, again, the daily closed below and we shot straight up above and closed the daily as well as the weekly above the previous consolidation that we had, typically warrants a lot more upside. So going forward in terms of a buy the dip mentality, as long as we stay above at the very least 4,385, you're looking at dips getting bought for more continuation. If we were to fall back below 4,385, then we can see more downside this week back to around this trend line. But again, dips will still get bought around this trend line for that continuation upwards. So there's a lot of support below where we closed last week. And I'm still not interested in taking a short setup on this rally. Again, we can see kind of minimal pullbacks from here that would be healthy. Of course, we are very overbought, like I just said, on any time frame for that matter. But still, I expect these dips to get bought. At least any substantial dip will likely get bought for that continuation upward into end of year. We, of course, can see a down week at one point. It doesn't have to be a straight shot up, kind of like we've been seeing so far. But still, the trend remains overwhelmingly to the upside after that capitulation phase that we saw over here that I was referencing a couple weeks ago over here when we went into the 4,100s. And this was a very, very strong retest. Remember, this is the same range that acted as a resistance back here in April and May of this year that it took 5 weeks to break back above before that large continuation move to the upside. We just retested that on the weekly and then had a major bounce. No surprise that there's a major bounce from that range. That's what I was looking for. We did end up getting that major bounce, and it's had continuation thus far. So I like what I'm seeing here on SPX. Something else that was interesting from last week at least was Uber's call flow. So this is a ticker that typically does not get a lot of unusual flow or flow at all, especially over 500,000 or a million in premiums. So this is just from last week alone. Very unusual to see this amount of flow, especially bullish flow. And what's interesting is if you look at the chart over here, because I always like to pair technicals with flow, you can see we had a clean breakout of this trend line over here. Not only was this a major breakout that started with earnings actually from around that previous week, you can see we had a large gap up followed by continuation afterwards. Not only was this a large breakout in terms of the micro level, if you go a little bit, zoom out some more, you can see we broke out of a very key level around that 50-ish range, which I could just show you with a quick display here of a horizontal trend line. But you can see right around roughly 50, I guess, to that 47.50 from previously over here. You can see that this was a key level, specifically 49 in this case, because you see resistance over here as well as over here. We broke above all of that, and not only that, there was a head and shoulders setup on the daily, on the macro level for the last about 3 years or so. You can see the left shoulder here around that IPO. Then we had the head over here where it topped out in 2021, and then a potential right shoulder over here, and it broke out above it. And if you watch this channel, you know whenever you have a breakout of an opposite pattern where it's not supposed to break out, it's supposed to break down, that typically means, well, first of all, it is a fake breakout, and then two, that means that there should be an extended move in that direction just because a lot of the shorts will end up getting squeezed in this case, as well as it shows a lot of strength overall. The fact that it was able to break above, which typically is a bearish pattern for a head and shoulders. So as long as we stay above roughly 49, we should see a lot more continuation upwards, which is likely what these whales are seeing here. Now, they may not be looking at just technicals, mainly because they did have a lot of leaps that they were buying. You can see 117.25, so a little bit over a year out in terms of expiration. But regardless, there is a lot of confluence in terms of bullish flow. 3.4 million in premium, 1.1 million in premium. These are pretty large prints, and these were a decent amount out the money as well here. So this is definitely something you'll want to watch this week, especially going into the end of the month, because again, we did have that multiple daily closes above 49 as well as the weekly close. So if we do retest it here coming up this week or the following around 49.50, there's a potential buy the dip setup here with risk being under roughly 48 because we did have this downtrend line here, which just about converges with 48. So a nice buck to a $1.50 of risk for a lot of potential reward, because you saw over here, their strikes were in the high 50s. Now, again, these do have larger expirations, but regardless, they are bullish, and it seems like a bullish chart. The fact that we broke out above, and it's finally getting volatility, because before Uber really wasn't that volatile in terms of intraday moves or day-to-day moves, you can see from back here. So the fact that it is getting a lot of volume, at least right now, as well as a lot of price movement, is a great sign, especially for options traders. And the last thing I want to talk about here is Bitcoin. If we go to Bitcoin's chart, you can see it's been a major rally so far for not only Bitcoin, but all of crypto recently. And the reason I bring it up in this video is because Bitcoin has front ran a lot of NASDAQ's moves so far this year. So we saw a major pump here in Bitcoin a little bit before NASDAQ also pumped, like I just showed you with QQQ earlier. And now we had an additional breakout as of last week above the consolidation zone from over here for continuation up to around 37,000, 38,000 on Bitcoin. So the fact that we had even more strength just shows QQQ is likely to follow in suit. So the fact that we haven't sold from up here, it's still very strong, a strong weekly close, etc., just supports the case on QQQ staying up around these levels. Again, we did break out, like I showed you earlier in the video, above this downward trend line. So this is looking very strong at the moment, as well as Bitcoin is also looking very strong. You can look at Bitcoin if it has any type of major move. You can see it as an indicator of what is potentially to come for QQQ. That's at least how it's worked this year. It doesn't always have to be that case, but the fact that this is still strong, along with that a very strong weekly close on QQQ, we're looking at any substantial dip being bought up here going into end of year. So this is a great way to gauge a potential strength on QQQ, at least for that QQQ to a Bitcoin ratio. And one final thing I'll share very quickly, you can see here on the VIX that we did have a major breakdown. We actually closed last week's weekly candle below 1420. That's one of my key pivots. So it's been absolutely hammered so far. Great to see. First of all, that we're below this 1760 to 18 range that I talked about previously. The fact that we're below is a clear risk on signal for equities and just the markets in general. So I like that we're even lower below that. And really, as long as volatility stays subdued, we'll continue to see kind of this melt up behavior in a sense. And of course, like I said earlier in the video, there can be minor pullbacks, but for the most part, with volatility being this low, it's likely that we remain up here at higher prices for the time being, at least going into end of year. So other than that, as always, appreciate you guys watching this video, and I'll see you guys next time.